Hello everyone. Markets moving like mad. Let's decode the chaos. One wave, one trend, one smart move at a time. Welcome to Decoding Markets in 3 moves, where analysis turns confusion into clarity, led by Mr. Rohit Srivastava, the mind behind Indiacharts and Strike.money. So, welcome back, sir, once again.
Pleasure. Pleasure to be back.
So, yes, it's been a while that it's been 2 days that we haven't met on the live. So it's the end of the week. The week's gonna close, starting of a new week. How was the week, sir? And what we can expect from the coming week?
Yeah, not a pretty week. The Nifty is closed down for the week, so it makes us think a lot about the structure. Our own RMI indicator gave a bearish crossover today. So, what we've had to spend a lot of time thinking as to whether this pullback over the last 2 days is just a natural correction to the uptrend or whether it can mark any kind of trend reversal. Now, so far, we are still sticking to the view that it could be just a corrective pullback because we are still above the July high of 25,670. So holding above that is a good thing. But now on the weekly charts, having closed down, the RMI are giving off some warnings that you have to maybe pay heed to on a risk management level. And let's see, we'll have to monitor the early part of next week and see how things go from there.
All right. So moving to the first question for today's session is like, is USD INR setting up for a major breakout based on its current wave formation? And what potential targets does technical analysis suggest for the next big move? Or could this phase unlock fresh trading opportunities?
So USDNR is a little tricky. Uh, I wouldn't call anything a major move. These currency markets move very, very slowly, and the recent moves have been very, very slow in that sense. In fact, we saw a sharp pullback in the USD from 88.80 all the way back to 87.60 recently, and now we are bouncing back from there. What I've tried to consider is that what if it is not a corrective move and ends up being the fifth wave of some structure because it did not break the channel on the way down. So we have room till closer to 80, 88, 80, 89 to move up, and we let that happen. But the weekly RMI is actually in sell mode. So what that means sometimes is that you end up getting negative divergences, and the negative divergence itself can be a sign that this may be the final move up, final blow off move on the upside. So, but let it play out. It still has room, maybe another rupee at the most. Like I said, around 88, 80, 89. The spot is 88.60, so that's not even a rupee. It's like, sorry, I'm saying 89.80. Okay, I'm saying a wrong number. So 89.60, 89.80 uh, is what we are really looking at, and that's around a rupee higher from where we are. That's the risk to the currency, not more than that. I don't think we might go much more beyond that.
Okay. So just a small thing. For the people or the viewers who are watching this, are we clear to all? Because we got one comment that we are not audible. So is it for everyone or it's just for him? Just wanted to make it sure. Guys, you all can comment. Yeah, thank you. So moving to the next question, sir. Is there still a potential for leg up in gold prices in the near or medium term? Either or is it a corrective or impulse move? given the current technical setup and support zones around 3,886 to 3,905.
So I have taken a view that gold and silver probably peaked for the year. Okay, unless there is some new evidence, I believe that the top we made recently is the top, and probably we will not be making a higher high for the next 6 to 12 months, and then we'll see from there. So I am not looking at this as a I mean, what we've seen, the recent selling that we've seen is possibly the start of a correction, and not really a correction in what was already a very strong uptrend. I think the strong uptrend became very, very overbought. Something we've discussed, I think, over last several weeks. Just give me a second.
Sure, sir.
Yeah, so that's my view. I think gold and silver have topped out. The pattern between gold and silver are slightly different. For example, silver is an impulsive downward trend. Okay, which means that it's 5 waves, and any bounce will be a retracement. In gold, we have a slightly different pattern so far. It's possible it changes, but so far it looks more like a 3 wave fall, not a 5 wave like in silver. So it could be a more complex structure, which in wave analysis we mark as ABC, X, ABC, X, ABC. So it's a series of 3 waves, X waves, threes, threes, threes. So there's a difference in structure between how both gold and silver are correcting. But in terms of what they will do, will be nothing different, because it's just going to be a retracement of the fall, and then there'll be a fall again, and then there'll be another retracement and another fall, and you'll have to keep on judging these swings over a period of time, and it will get slightly difficult as it gets more complex. But broadly, till we don't complete weekly cycles, till we don't cool off from the 91, 92 RSI reading on gold on the monthly chart, I think we will remain in a corrective phase for the precious metals for the next 12 months. And as I've highlighted in a lot of my media interactions, it's time to really switch away from precious metals towards equities. And you will not beat the market with an asset allocation to precious metals, at least over the next 12 months. That doesn't put an end to the PM bull market long term meaning 5 years or 10 years. But 1 year is where I'm concerned.
So let's move to cryptos, and that part is the last part for today's questions from my side. So can you explain how the recent movement patterns in bitcoins are being interpreted using wave analysis, and what are the important support levels to watch for, and what targets might bitcoin reach next according to this technical approach?
So I'm sharing my screen. You're looking at a daily chart of BTC. Okay, I'm not sure this. So what is this low? We made a low of around 106,101. Then we made here a low of 106,303. So this is slightly higher than this. So in a sense of classic Dow theory, we have actually not reversed the uptrend that has started to develop over here. And if we do continue higher, then it's actually the process of an upward trend that is in slow and early development. Okay, so that is the first thing to keep in mind. The second is we are somewhere close to weekly support. So if I go to the weekly chart, the 40-week average has been trailing here at the bottom end, and I was waiting for it to get touched, because the weekly RMI was in sell, and now it is almost back to zero. The reading is 0.04, and as far as the 40-week support is concerned, that is currently at 104,552. Okay, so 104,552 is where we would be buyers in Bitcoin, because I anticipate that it will go into wave 3, and wave 3 as marked over here can actually take us towards 1,72,000. So that's a pretty big number. If you're talking about a 60-70% appreciation in the value of USD, I mean BTC USD, and with the support at 104 552. So that's a pretty decent risk reward ratio to have. Actually a very good one, and that's what I think is going to be in play over here. It's just the short term volatility. As you see, this week we might actually close down. It's red. Okay, and that only helps the RMI cycle come back to zero. But given that we are still at the support level, we are still ready to take off into a bigger move, and that will somewhere be instigated by uh, a weaker dollar, which is still not showing up, because you see the dollar has essentially been strengthening, possibly because it fell too far. But given that US is cutting rates, even though there is a struggle around whether more rates will come or cuts will come or not, the intent of the government is to cut rates and therefore eventually weaken the dollar. And that's what is driving Bitcoin. So Bitcoin is just waiting. I mean, just shaking out the weak hands right now is what I would say, and waiting for the next move to start.
What the overall is perspective of the Bitcoin right now. And it looks like a good, not a good, but a decent investment opportunity right now. So uh, let's move to the questions asked by our viewers. Uh, it's just a request to all the viewers who are attending us from Twitter. You all can also like put down your questions if you have any of the questions on the chat itself, and we will take up you like your chat as well, and so we'll answer. Thank you. So starting with the first question, still Nifty in wave B or a long time frame, because 3 by 3 wave, 3 of 3 wave structure on hourly daily chart.
Yeah, so it's a possible outcome, but not a certain outcome. Since we crossed the July high of 25,700, or 680, 670 to be exact, we are sort of consolidating above that. And while the rise is 3 waves so far, uh, it still hasn't cancelled out the possibility that the last few days correction is essentially wave 4, and you can still get a fifth wave on the upside. So you have to rule that out completely to be able to say that, yeah, this ended in 3 waves and we are done, or is this just 4 and then 5 will follow. So I think that debate goes on till the market gives you proof that, yeah, I'm breaking out of this zone to a new high, or I'm breaking the support and going to a new low, neither of which has happened. So we actually stuck between 25,700 to 26,100, and we need to break out of this to end this debate.
Moving to the next one, sir. So as anticipated, US Fed announced a 25 bps rate cut, and DXY inched up higher by 99.56, that is around plus 1.5% INR, showing weaknesses. Are we heading towards 25,400 first, and then after like ATH before FIIs go for holidays, that is Christmas?
It's fine tuning a lot. Let's say that if you do break 25,700 or 670, you can go down to 25,400. But I'm not completely confident or certain that you will go down there. So in my view, it's completely open which way this goes. You may not fall that far and still head higher. We have 2 months ahead of us, and seasonally this period, see, because the market did fall into September, seasonally October, November, December can actually end up being bullish months. So you don't want to be too negative during this period. But yeah, we will try to navigate it, but I'm not sure that you will get a dip to 25,400 or not.
Next question. Uh, many people, many private banks, reported better than expected quarterly members, and they say we are at the bottom of credit cycle and margins. So, will it improve hereafter?
I mean, if they are right and you're at the bottom end of the credit cycle and interest rates are being cut, it means that you will get revenue growth and profit growth both kicking in, which is essentially good. And most of the private sector banks or financials are at the lowest level of valuations over a 5 to 10 year period. So in that sense, they offer both value and growth, which is a very nice proposition to really have. So they are very low risk investments right now for anybody willing to bite.
Moving to the next question, sir. Can we expect rate cut by RBI in near term as inflation is at low level in India?
I definitely think so. I'm anticipating it will happen. I've been anticipating for a while that we need to see more rate cuts, but central banks are being very, very slow, fearing the inflation cycle that we just saw in the last 2 years, and also the impact
Mhm.
that it ends up having on the currency. Because if you quickly cut rates, the currency weakens. In fact, to some extent, I think the currency is weakening because of the potential that we might cut rates, apart from the trade deficit that we have. So there are two reasons that are driving the currency weakness. One is the trade deficit, and second is the idea that we will, have a dovish monetary policy.
So moving to the next question. Will Bihar election results affect Indian stock market?
Well, in elections used to have a no impact on markets, and over time they started to have an impact. But typically the impact is for a day, nothing more than that. So I don't really read too much into elections, but that's my idea.
So that's it. Like we have covered three of the questions. So that's all for today. Thank you everyone for joining. We will meet back on Monday. Uh, Same time, same place. Thank you, sir, for your time, and thank you everyone for joining.
I'll just leave
Thanks a lot.
people with one thought.
Yes.
When the markets are weak and when they are still torturing you, watch for where is the strength. That is the main thing that you need to be able to figure out. It's easy to do on strike. When you do a 5 day heat map look back, you can actually know where over the last 5 days when the markets were dull, what is it that was outperforming in the market. So it's called relative strength analysis, something I could do with metastock but very easily now to do with strike. I'm just going to show people a glimpse.
Sure.
So if we've actually looked at the market pulling back, okay, over the last couple of days. So let's say we can either take this entire time period from 23rd to today, or we can take it from this recent top of 29 to today. Let's do 23rd to today and see where the action has actually been. So let's go to the heat maps, click on custom, take the time period from 23rd to today. Okay, so this entire time period, when we apply, you end up seeing the performance of the market for the given time period. So it's a better way of looking at things than just the standard heat maps of what is happening today, which is typically what you see in most places. Now, when you're actually doing this time-based heat map, you're actually figuring out where the strength is, where the money went, what outperformed versus what, and you actually see PSU banks, metals, oil and gas on top. I would have thought to some extent even PSE, because recently the PSE index in the last 2 days only actually, so that's why it's maybe not yet showing up, just broke out of this range that it was stuck in for many, many days. This is a very interesting breakout because it sets us up for potentially a stronger rally ahead if that has to happen. And yeah, I think keep an eye on this. So uh, this is a good way to really know where the action is and where the focus should be. Because what is outperforming right now, which means if metals have been going up during this period, even as the market is falling, that is where you will continue to see gains in the weeks ahead. So, and same as with PSU banks, oil and gas, among key sectors. So just wanted to highlight that to people. One of the interesting features of Strike, to know where the winners are.
Right. Easily spotting the winners so that your money is in good investments. You don't lose in the markets. So thank you everyone again for joining. So let's wrap it up over here. Thank you, sir.
Thank you.